So, great question, by the way, from Gustavo Anaya. So, and I like this question, and it's always a point of discussion. So, Gustavo says, I feel like stop losses are a double-edged sword. It can protect you, but it can also kick you out of a trade that bounces very quickly. Interested to know on how does everyone manage this? Do you use a stop loss to take the loss knowing it can bounce, or do you risk it and exit manually once an alert was triggered? And if yes, how much time do you give before you decide it won't bounce? So, like, there's many intricacies to this question. So, the thing is, like, many of these stocks, like Mara was a very good example. Okay, Mara this morning, cryptocurrency stock, kind of trended up, and it actually hit the Oracle level at 1014, and then that was about mid-morning, and then it pulled back hard, hit the stop, and ultimately worked. Now, I use Mara as an example because, yes, it pulled back mid-morning, and we were going over that one live with the Steady Trade team, and it didn't work. Took the stop. And I was like, man. And then came back and ran. But here's the deal. Late day, Bitcoin fell apart, and Mara got destroyed along with all the other cryptocurrency stocks, which I keep saying the cryptocurrency stocks are weed stocks 2.0. But the point is, had you taken that morning idea and been stopped out, then you wouldn't have risked the washout into the end of the day, and you would have controlled your risk. Now, it's frustrating and it's annoying, okay? And I get it. One of the things like Gustavo calls stop losses a double-edged sword. I don't consider stop losses a double-edged sword. Now, what I do consider a double-edged sword is volatility, okay? We trade some of the most volatile stocks out there, and the reason we trade them is because they make big moves. Now, sometimes those big moves, hopefully more often than not, those big moves are to the upside versus to the downside. But and the analogy I often use is listen, if you don't want any volatility, then trade quote unquote real stocks like Apple, and like best case scenario, 1 or 2 times a year, Apple will move like 2 or 3%. So it's like you're kind of in this position where you I don't want to say forced, but if you want to grow a small account, like, I guess forced is the right term. You really have no other option than trading extremely volatile stocks. Now, you got to take the good with the bad. You know, it's like you can't, if you want to trade stocks that can double in a day, then you have to recognize that there's a good chance that stock could spike, hit your signal, you take the entry, and then it collapses, hit your stops, and you move on. But there's so many recent examples, like Friday on MGRX, okay? Remember, who remembers Mangoceuticals? Oh, glorious, okay? Mangoceuticals. If you were on pre-market prep Friday morning, we had some fun. Mangoceuticals. It's funny. I don't even know how I knew. Like, as soon as I went to their website, it's very ambiguous and vague. But as soon as I saw like the names and like, I'm like, what is this? Like ED meds? I didn't even know what it was. So the point is, MGRX was absolutely beautiful on Friday. Okay. INAB, INAB, absolutely beautiful. Or I'm sorry, MGRX, I said Friday, right? MGRX was Friday. INAB was Monday. Now, I want to bring this up because BXRX. Okay. BXRX yesterday was exactly the same thing. Okay. And again, those of you that were on pre-market prep, you know this. We talked about this. So MGRX on Friday was glorious. Ridiculous risk to reward. Like 20 cents of risk for $1 of upside. INAB, very similar on Monday. Yesterday, BXRX, sketchy biotech, low float, had press release. BXRX was literally a box checker across the board, and it didn't work. It didn't work. But the point is, if you trade high risk to reward setups, if you trade quote unquote box checkers, you're gonna get those scenarios like if the only 3 trades you made were MGRX, INAB, and BXRX, you'd be green. And you'd probably be very nicely green. So, but here's the deal. It only works if you keep those losses small, okay? And when we talk about, maybe you've heard this, I don't know if it's an analogy or if it's a limerick or a rhyme. Limerick. But so a thought idea, okay, a thought experiment. The rule of 5, okay? So when I talk about the rule of 5, we're talking about let's think about you trade once a day, which is pretty much what I recommend. And if you make 1 trade a day, 5 straight days, and Monday you lose $100, okay? We're assuming you have small accounts. Monday you lose $100. Tuesday you lose $100. Wednesday you lose $100. Thursday you lose $100. So at this point, like, it's absolute despair, okay? 4 straight days, you've lost money, okay? Nothing works. You're like, penny stocks, trading's a scam, you know, day trading doesn't work, you know. All these thoughts go through your head. And justifiably so. But what you did is you contained your losses and you didn't risk disaster. So let's say you have a $3,000 account, just picking a kind of average number for a small account. 4 straight days, lost every trade you made. Okay, for this thought experiment, this limerick, you're trading once a day. Every day, lose, 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 lose. Then Friday comes. Well, let's go back to last Friday, MGRX. Okay, so Friday comes, and actually, let me bring up my notes on MGRX. And let's go over like the actual alert and trade that I sent on MGRX on Friday. Let me bring it up here. So this is last Friday morning, 9:17 a.m. Today's alert is MGRX. We went over it in pre-market. We went over it in the Steady Trade Team webinar. I said the entry was $1.70. The target was 2+, or I actually meant high 2s. I actually cut that out. It should say high 2s, and the stop loss is $1.50. So think about that plan. The entry was $1.70. The target for profit taking was the high 2s, and the stop loss was $1.50. 20 cents of risk for $1+ of upside. 5-to-1 risk to reward. Then I gave the notes. Wow, what a piece of trash scam. Go to the website when you want to laugh. That being said, it's a low float with news and volume. We went over the 150 entry, blah, 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 blah. Okay, this thing literally checked every single box. So $1.70 hit on MGRX, and it went to $3.18, I believe, if I remember right. Yeah, $3.18. So if you would have followed the plan, you would have bought it $1.70. You would have sold in the high 2s. You had plenty of time to get out. Sure, it went to $3.18. So now you make a trade that got you over $1 a share. Over $1 a share. So let's go back to the rule of 5. So what happened in this scenario if you kept your losses small? Well, what happened is now Friday comes and you made $500 on MGRX and you're now green on the week. Now, when I talk about this scenario, the first thing people will say is, $100 on the week. Okay. But the point I'm making is none of you are here to make $100 a week. You can make $100 a week selling stuff like a yard sale. Okay. But the point is, if you, and this is where the rule of 5 hits home. It only works. This scenario that I laid out, it only works if you take a $100 loss on Monday and on Tuesday and on Wednesday and on Thursday. It doesn't work if you take a $500 loss on Monday, a $200 loss on Tuesday, a $150 loss on Wednesday, and a $200 loss on Thursday. Okay? It doesn't work. It only works if you keep those losses small, you keep trading the best stocks and keep trading the best setups, and then when you get one, and then you're green on the week. So SAI was a buy today at 380, and it never hit the stop level of 350. It ran 470 and dropped in the 5-minute candle. I did not sell. Had a couple opportunities to sell at 450 in midday, but did not. Looking at a late day or high day, in your opinion, with the hot sector of AI, would you have held overnight or sold at the close for a small loss? Man, so great. I love it. I think what you did, I like what you did, by the way. So basically, sure, you could have taken the profits, which remember, there is nothing wrong with taking profits. I mean, you were in at 380. You could have sold at 450. Nice profit. Okay. Now, what I think you did is what I would call aggressive. Okay. Like you were, and something, whenever I talk about being aggressive, I always want to explain that aggressive isn't bad. Okay. We've often talked about the hot hand theory. Okay. Another thought experiment for you. Okay. Hear me out. And I'll close this. Eventually, I'll close the loop. So the hot hand theory. So Randy's trade was aggressive, holding overnight. The hot hand theory says it's like a basketball analogy. That's usually where I go. Like if you got a guy, like if I'm coaching the team, I've coached youth basketball. I miss it, but like if I got a kid on the floor and he's 5 for 5, okay. I mean, he's just throwing up everything. But everything that he throws up goes in. You know what I'm going to do? I'm going to call a timeout. And let's say it's Randy. I always go with Jimmy. I'm going to go with Jimmy. I was like, Jimmy. So I'm going to sit there and I'm going to look at all these kids. And I don't care how old they are. I don't care if they're pros or whatever. I'm going to be like, whatever you do, you get Jimmy the ball. He's 5 for 5. He's throwing up bombs, but everything goes in. And now, if that is you, like if you had a really good day, things are clicking, you're up $1,000, you're up a couple $1,000, like just things are clicking. You got a really good week going. That's when you get aggressive. Now, vice versa, if you can't like you're missing layups, like nothing is working, then what you need to do is pass the ball to Jimmy, okay? And I'm going to tell you that. Like if you miss the third layup in a row, I'm calling timeout and I'm going to be like, Randy, I don't care if you're wide open, 0 defenders, like nobody. I'm like, you do not shoot the ball. You're 0 for 5 and you miss 3 layups. So that's when you don't get aggressive. So we now defined aggressive versus conservative. And let's talk about ultimately your trade on SAI. It held the level, never hit the stop. Artificial intelligence is hot. Freaking Microsoft. Microsoft. Guys, you realize the significance of Microsoft? $2.2 trillion market cap stock, up 8-9%, and held all of its gains. All of its gains. Microsoft basically closed at the high of the day because of artificial intelligence. So I told you I would bring it home. You took a very aggressive trade, a decision, holding a sketchy artificial intelligence stock overnight, but you're green, okay? And it's the hottest hot sector that I think we're ever going to see in, I've said this, and I've said this since late January, early February. If you're going to hold a stock overnight, and if you're going to take the aggressive course of action, then you know what? You do it in a hot sector play. You do it in a low float stock that closed above the stop. I mean, those are all the things you look for. So it took me a while, but Randy, if you're comfortable with it, now this is the second subset of something that we always talk about. And this is something a lot of people forget about, okay? Look at CXAI this morning. And I say that because if you're going to hold these stocks overnight, okay, you got to be ready to get up at 345, okay? And that's something that it's funny because I never really hear people talking about this that much. But if you're overnighting, NASDAQ, NYSE stocks, volatile stocks, you got to get up at 4 a.m. Well, 3:45, okay? This is one of the things with like OTCs. And I always want to be clear, I'm not like an OTC hater, okay? But you got to remember, there's a reason that a certain subset of traders only trade OTCs because they don't trade in pre-market. Okay, these guys want to sleep in, okay? Now OTCs can trade in pre-market, but barely. They don't do anything. They basically wake up at like 5 minutes before the close, okay? That's why the laziest people, that's one of the big reasons I bash OTCs, because the laziest people in the world trade them because they know they don't have to actually get up early. Now, what's great about NASDAQs, especially heavily shorted low floaters, if you're willing to get up early, we all know about the 4 a.m. squeeze. I mean, you get a hot sector play that closes at or around the high of the day. How many do you see rip at 4 a.m.? I mean, it happens over and over and over again. So that's the other thing, Randy. Just set the alarm clock. And listen, it's not that hard. It's not that hard to get up at 3:45 Eastern. Like people act like it's the end of the world. I mean, I get up at 4:45 Eastern every single day, 7 days a week. Okay, it's not that hard. So anyway, Randy, I like your trade. Well done. I think there's a good chance you get that 4 a.m. gap up. So how do you know when to take profits, says Peter Nardella. So Peter, listen, I do these webinars for a reason, to teach you, okay? So I always hate giving this answer because it always sounds very excusey, but there is a profit stop loss and risk management methodology that I teach, that I developed over a decade. It's called the 3-to-1 risk to reward methodology. So now I teach it every day. We go over it every day. If you're on pre-market prep, if you're in the steady trade team, we literally go through it every single day. Like if you look at Randy's comment, okay, notice if you look at what Randy broke down, look at what Randy broke down, and you can just scroll up. He broke down the risk management, the 3-to-1 plan that we had this morning. If you notice, he lists it all, okay? 380 entry, 350 stop, and the goal was 5, okay? Now, Randy chose not to take profits because it ran up to 470 and didn't hit 5. But understand, that was the plan. If you listen to the plan, there was 30 cents of risk, okay? 380 entry, 350 stop. What was the goal? 5, okay? $1.20 of upside. So actually 4 to 1, basically. But the point is that every time before we enter a trade, we figure out all of these levels based on technical analysis, based on the chart history, and based on the range of the stock, okay? Listen, if you're trading some true penny stock like CRTK, okay, you might have a 3-cent risk and a 9-cent goal. But it's kind of a big picture thing. But we do it every day, and we base it off of the chart. And like the best example I can give you without going into a 4-hour webinar, because it's my bedtime. Well, in an hour and a half, it's my bedtime. But there is a methodology. And we did it with SAI. We did it with MGRX. We did it with INAB, CXAI, et cetera, et cetera. Good stuff. I like to, what I always like about these, and those of you that have been here before, like pre-market prep, and I know I've mentioned it many times this evening, like pre-market prep is like very focused on entries and exits and like how do we and what levels do we trade these stocks. What I like about tonight, we talked about the psychology of, the rule of 5. We talked about the psychology of 3 to 1 risk to reward. We talked about the psychology of when to be aggressive, when to be conservative. Okay. So that's what I always like about these. So thank you guys. It's always fun. It's crazy. I've been mentoring traders for 8 years now. I've done over 6,000 live trading webinars. I started my day at 4:45 Eastern. I'm going to do it again tomorrow. But I always look forward to these. And it's just like, what's crazy is like every single day I get messages from people. They're like, you changed my trading. You changed my life. All of these things. And that's my fuel. So that's why I do what I do. Hopefully it was a help. Jay, nice. Jay says I've been trading breakouts, taking 5% profits, 2% loss. That awesome, Jay. Thank you, Jay. So Jay, interesting. So Jay is kind of trading that rule of 5. Very nice. So he's taking small losses or small gains, but small losses. So Jay is basically trading these breakouts on the best stocks, small losses, big gains, and he's profitable. Listen, guys, that's what it's all about, okay? And I know I've harped on the rule of 5 a million times tonight. Last time, your goal as a new trader is to be green, okay? That's your goal. Now, remember, half of you probably left. Remember in the rule of 5 example, you're up $100 on the week. Okay. You're not retiring on $100. You're not, paying off your debt on $100 a week. You're not traveling the world on $100 a week. But you know what you just did? You're green on the week. And that is something that so many newer traders, they look past. Because this is what the new traders do. The new traders, and thank you, Jay. I'm going to close this one strong. What new traders focus on is the travel in the world, the Lambos, the yachts, the mansions, zero debt, retiring, at 25. So what so many new traders do is they look past the process. They see all these amazing things and jets and yachts and all this bullshit, okay? and they never actually learn how to trade. And that's why 90% fail. Okay. Because they're looking over here at some dude that pulls up in a piece of shit Lamborghini, and they're like, well, I want that. But they don't take the path to get there to make, $250 or $1,000 trading. And you know how you get to the point where you can buy that, or you can retire, or you can travel around the world? The first thing you do is you learn how to make $100 consistently. That's what you do. Because you know what you can do. If you can make $100 a week, 2, 3, 4, 5, 6 weeks in a row, all you got to do is start adding a little more size. And all of a sudden, it's $1,000 a week. Hey, $1,000 a week, that can change your life. Okay? That's, $4,000 a month. Okay? Now again, it's not yacht money, it's not Lamborghini money, it's not mansion money, it's not retirement money. $4,000 a month. Hey, all of a sudden, things start changing. But it's because you spent the time to learn how to make $100 a week, which is $400 a month. Okay? So that's our goal. That's what I teach. And that's why I drive people to think long-term and think about the process. Because you can't make $1,000 a week until you can consistently make $100 a week. So you can look past that and want all the fancy stuff, but you'll be part of the 90% that fail, because that's what they all do. All right, guys, have a great night. And thank you, Jay, and well done, Jay. He's been profitable most of his last couple weeks. Keep grinding, Jay. All right, guys. See you tomorrow morning.